Hello guys, my name is Lunta Di La Paulo and I'm the founder of Yeto Accounting and Tax LLC. And today I have some good news for all of the folks who are real estate professionals, who work in the real estate space. And I want to share with you and actually walk you through a scenario that is going to show you how you can save taxes, uh, pay less taxes in the next tax season. But before that, I just want to share with you one piece of news that recently saw from the Wall Street Journal. They commented about it and they made a big deal about it. So the piece of news talks about the leak in the IRS. Somebody seems to have leaked about 15 years of tax returns of some of the wealthiest U.S. citizens, and the investigative journalists who put this data together, ProPublica, this is the conclusion they came with. So Warren Buffett, Jeff Bezos, Michael Bloomberg, aka former presidential candidate, and Elon Musk, they paid, as you can see here, an effective tax rate of less than 5%, right? So for a lot of people, it's kind of that's not fair. It's one of these things that gets people into debates and so forth. But here's what I want to share with you. Here's my view on this. The only reason the billionaires can actually pay less taxes than most of us, or the effective tax rate less than most of us, is because they have armies of professionals, accountants, lawyers who work with them to arrange their business, their family affairs in a way that allows them to pay significantly less tax than the most of us. And they use exactly the same tax code that you and I have access to. The only difference is the fact that they take advantage of the tax code to pay less taxes. So it's not illegal to pay less taxes. What is illegal, however, is actually the person, whoever they are, who leaked the tax return. They will, when they found the IRS is currently conducting an investigation. When this person is found, they will be prosecuted. So that's to protect the privacy of American people, American citizens. But this is just a little bit of tip that I wanted to show you in terms of the value of a good tax planning. So here, what I actually want to show you is to walk you through the real estate professional status that is such a powerful tool that people or professionals in the real estate space often do not take advantage of enough to lower their taxes. So I will show you a little bit of this tax strategy and how different pieces come together to make it really effective. So I'll be sharing my screen here with you, and just one second. I'll be sharing my screen here with you. Let me move these aside, and here's my screen. So the first thing we need to make sure we understand is to make sure we know who is or who can qualify as a real estate professional, right? Because let's say you are an agent and you spend a little bit of time in the real estate space, you help other people buy or sell houses a few times a year. Does that really make you a professional, a real estate professional according to the IRS? The answer to that might surprise you is no, because there are certain rules, certain checkbox, as I often tell my clients, that you have to check, that you have to meet before you can qualify for that. And I actually put them here in the screen. The first two are if you spend more than 750 hours in a real estate business, and you also must spend the majority of your time in the real estate business compared to your other activities. So let's say you are a medical doctor or you have a W-2 job. If it's a full-time job, it's more likely that you're not going to qualify, even though you spend a little bit of time in the real estate space. So unless you have a part-time job that you don't spend more time in that part-time job than in the real estate business, and you have the key 750 hours minimum, then you would qualify as a real estate professional tax status. And you might be wondering, why is that important? I'll get to that in a second. But let's see another criteria you have to meet, another checkbox. If you don't meet these first two, how else can you qualify as a real estate professional tax? You can take advantage of this professional tax status is either one, by holding a license in one of the covered trades. So the covered trades are highlighted here below, right? If you're a contractor or if you are a broker, these could qualify you, or you are you are a property manager and so forth, but we'll talk about that. But you also have to own at least 5% of the real estate company that employs you. So here's one of the areas where a lot of real estate agents or brokers actually fail miserably, because they are brought in as independent contractor. They receive a 1099, or they are employees in a real estate company and they don't necessarily own 5% of the company, hiring them to do the work, right? So it's important to remember, either you spend 750 hours in a real estate business and you spend the majority of your time in the real estate business compared to your other business activities. Okay, and if you don't meet these requirements, you have to make sure you are a licensed professional and you own at least 5%. So here's a good strategy that we will be deploying. Okay, so if you only have a W-2 job, I'm gonna walk you through an example now. Let's say you make $100K a year. You pay FICA 7.65%, and then you pay your federal income tax. Let's say, for the sake of this illustration, is 30%. So you don't pay the 15 the self-employed interest. You pay FICA because you're W-2, but you also don't get the qualified business income deduction, right? So currently it's 20%, which is an amazing tax saving machine. And you don't qualify for the real estate professional status because you don't meet any of the requirements we have highlighted here, right? So now let's say you own a you are a 1099 person, or you formed an LLC and you are operating your real estate business, and you meet all of these and you form this LLC and you are operating your business as a real estate business, right? So if you have a little bit of tax planning, maybe you know a little bit about taxes, or you work with someone who've done your taxes before and they advised you reduce your expenses, your business expense, and you have a net income of 70K. But the problem here is that you have to pay self-employed interest, right? Excuse me, self-employed taxes. And that's gonna be a little bit of money there. So right now, based on our calculations, is about 10K. And on the benefit of that, right? So if you are a solo proprietorship or an LLC or an S corporation, you can qualify to take on the 20% QBI deduction if your income is below $161,700. and above that there is an additional adjustment that have to be made. But for our sake, the income is around 100K, so it meets perfectly the requirement. So you can take that 20% of your net income. However, because you didn't arrange your tax affairs in a way that allows you to take the real estate professional status, that allows you to take $25,000 of loss against your other income, so you can't really take that for this case. And then you have to pay the federal income tax. We're just assuming that in the state you live in there is no state income taxes. However, if you adopt an S corporation strategy, right, you have the same expenses, but here's one other thing that you don't have in an LLC. You can pay yourself a salary to reduce your net income. But you'll have to pay FICA because you employ yourself as an employee in your business. And again, you'll get to take the qualified business income deduction, which is the section 199A. And these real estate professional taxes is actually coming from the information that we have below here. So let's say we made an assumption that you are a property manager of a real estate property you own, and you bought the property at 600K, and the useful life is 39,000, and it's creating a rental income 30,000, some expense. We have there, you have your NOI, net operating income, you're paying back the mortgage, principal and interest, and you have a net cash flow positive, right? But here's the miracle here, right? Because you have a large depreciation, right, your net income is actually negative. You have a net loss on paper, which is typical in the real estate space, but you have $8,000 that is tax free. So we plug this loss here in your calculation, and this effectively reduces the amount of tax you're paying. So we're comparing the amount of federal income tax you pay between an LLC and an S corporation. You're paying almost $10,000 in taxes more by not adopting the S corporation strategy, right? And by not using the real estate professional tax strategy. So you can also see here our net cash flow line. You have a lot more cash on hand because you're paying less taxes than if you had used a different strategy. And we can see here, if you're a self-employed person, you'll be paying more taxes than someone who has an LLC, and a person who has an LLC will be paying much more taxes than a person who owns an S corporation. And here's where everything comes down, right? So the effective tax rate, as we can see, a person with an S corporation compared to a person with an LLC, they are effectively paying 17% tax. They're paying less than the person with an LLC. So 17% less taxes than the opposite. And when we put it against someone with a W-2, we are actually seeing a drastic difference. That's gonna be one of the biggest difference between this strategy. So this is to say, to tell you that it's really important to look into your business affairs and arrange them in a way that works in your favor. So just imagine, right, if you're paying for example, in this case, you're saving about 17,000 in taxes by adopting an S-Corp strategy mixed with the real estate professional status. If you are saving every year 17,000 and you putting that into retirement, or you putting that into some form of investment and earning 5 to 7% return in 20 years, 30 years, how much would you have accumulated for your own benefit, right? That's always the bottom line that I share with my client. We're not saving tax for the sake of saving money, saving taxes, and then go spend it however way we want. But we have to invest. We have to put money aside for retirement, and so forth. So this is a little bit of piece of advice that I wanted to share with you. And I hope this was helpful to you, and it's gonna allow you to consider a little bit more how your tax situation is, how you're positioning your tax situation, and who you are bringing on your team to help you with your tax affairs. So if you don't have any professional who help you, who advises you, feel free to connect with us. Our phone number is 773-937-1264, and our website is yetoadvisory.com. Feel free to text us, to give us a call, or to schedule an appointment, and would love to connect with you, and hopefully we'll be able to help you. So if you like this video, if you enjoy the content we're providing, feel free to like the video, give it a thumbs up, subscribe for more information in the future, and please, it doesn't cost you anything. Share with other people who might benefit from this content. All right, I hope to see you soon. You have an amazing evening.